I'm investing pre-seed and seed. Once my mom's talking about something, like it's not the time for me to be looking for that type of solution. This might save this company a bunch of money, but are we like a top 5 money savings thing, or are we like number 47? Can you get to a price where you have the ability to wipe out your competition in a particular application before you need to spend like $100 million building a plant? One of the nice things in hard tech, if you show up and say, I invest in that, you might be the only person in the room. When I was a kid, I was the guy that would buy like the eco-friendly sponge, and it would be terrible and it would fall apart. And you'd be like, wow, that was awful. And then you start wondering, why is the eco-friendly solution always the worst one? And the answer is it's not. When the eco-friendly solution is the better solution, that's just what you already do anyways.
Welcome to the Diligent Observer, where we help angel investors see what most miss. I'm your host, Andrew, and every week we explore what works, what doesn't, and why through conversations with experienced startup investors and operators. My guest today is Anthony Del Porto, founder and general partner at Betterway, a pre-seed VC focused on industrial sustainability. Anthony is a mechanical engineer-turned-COO-turned VC, and in this episode, he walks me through why he deliberately targets boring, real-world startups, how he evaluates whether a hard tech company can survive without a green premium, and why the classic hard tech is hard objection is kind of losing its teeth as financing solutions for the space mature. I hope you enjoy learning from Anthony as much as I did. Anthony, thanks for being with me today.
Absolutely. Great to be here, Andrew.
Okay, so I have to start with my classic first question, and that is, what are you excited about right now?
I'm excited, honestly, about mostly pretty nerdy, esoteric, niche-y things that no one else is thinking about.
What does that mean?
My usual go-to area are places that are what one would consider boring, and then areas that usually require some level of like physical world, deep tech understanding, engineering background, physics background. And so what that leads to are areas that no one's paying attention to, so you can get into good deals at reasonable prices. What that looks like right now, though, the more specific answer is lots of stuff in materials, and then also just generally, we look in the industrial space, and the fact that critical minerals has now taken there's rare earth elements, things like that, have become sort of the topic du jour, at least in the world that I look at, is exciting because we were able to invest in some things before that was what everyone was thinking about.
I love the way you describe boring real world stuff, not this fake made up, alternate universe that is AI and software and it's the metaverse, all this stuff. That's not your thing.
No, it's not for a variety of reasons. One, I'm a mechanical engineer, so I really don't have a lot to add there. But also, part of my approach to this is once everyone's really excited about something, particularly as an early stage investor, right? So I'm investing pre-seed and seed. Once my mom's talking about something, like it's not the time for me to be looking for that type of solution.
So you're making me think of a recent trend I've started to hear about, and it's sort of this counter narrative to the made up AI universe, and it's this halo concept. I think it's heavy assets, low obsolescence, or something similar to that. Do you feel this counter narrative getting stronger? I mean, it sounds like this is the world you swim in, so I'm curious if that story or that trend is surfacing more and more in circles you swim in.
It's surfacing more, and what's interesting is this was one of my original thoughts, is that as you and this was a couple years ago, as you bring the idea of AI to its sort of full potential, what are the things that go away? And it's going to be a lot of SaaS businesses, because I don't need to now hire Salesforce to run my CRM, my customer resource management system. I can just ask an AI agent to make one for me that's bespoke to me, and then I use it for forever, and I can update it on my own. So why do I need to pay for some large SaaS service? Okay, if that's the case, then what's left that you can actually create or that has some sort of a moat that sticks around? And the answer is stuff where you have actually really strong IP protection, usually in the form of patents. And that usually means now we're in the real world. So materials, processes, things of that nature, where it doesn't matter that AI can come up and invent the molecule that you created. You own the rights to it. So now you can actually protect yourself.
So how did you develop this? I mean, obviously people have been investing in physical stuff for thousands of years, but for you specifically, you mentioned you're a mechanical engineer, you've got a background in the space. Talk me through kind of the evolution for how you got to where you are today in terms of your overall strategy.
Sure. So originally I was doing industrial process automation. So I actually I worked for a company, would drop into a factory, build out a machine that makes whatever they make there. And it was a lot of fun, right? You get to see how all kinds of stuff is made. You get to peek behind the barbed wire fences in factories. There are definitely a lot of moments where you're like, I can't believe this is actually the best way to do this.
Is there a story there? What's the example that you're thinking of? Don't break any NDAs, but
Yeah, yeah,
what's the
yeah.
story?
When you're making nuclear fuel rods, everyone's just walking around carrying nuclear fuel rods. Um, and you have these trays that they sit in that they have to cut these holes in the bottom of, because if there's a fire and the sprinklers start spraying water down, everyone's cool until the nuclear fuel rods are in water. That's when they start to create issues. So if you have a big trough full of nuclear fuel rods, you don't want to fill it up with water during a fire because it leads to bad things. And you're like, wow, that's here we are this whole time. That's actually the answer to how you do this.
I'm glad
Uh,
you're standing before me today to share this story.
exactly. So you used to go into all these factories, see how stuff is done, build a machine for them, deliver it, and then move on to something completely different. So nuclear fuel rods, growing crystals for lasers, which I didn't think was real, but that's actually real. Brakes for trains, brakes for cars, all kinds of stuff. Then a friend of mine was co-founding a startup in the software space, SaaS, fintech type stuff, and went into that world and quickly learned how much of a melee that is, because you're kind of only limited by ideas. And sure, there are network effects and things like that, and big enterprise sticky contracts that help with moats. But to a certain degree, um, speed's your only advantage. You're trying to get there and develop a solution before somebody else can. But eventually, they're going to catch up. And if everyone's looking and innovating in a space, probably most of the good ideas are going to get taken up pretty
Mhm.
quick. So it's actually a hard place to develop the kind of moat that's really going to work. And so then as I was looking at investing, I was thinking about what my skill set was more valuable towards, as well as sort of putting together some of these pieces around, okay, interesting. Software used to be you're limited by how many software engineers you can hire. Well, now if I don't need to hire them, now what is it limited by? And the answer is essentially nothing, which means it becomes more of a melee, which means it's really hard to defend yourself. So now you have to just look somewhere else.
So keep going. Like, how did this land and develop into? I mean, you were as an operator for years. You've kind of
Mhm.
sat on both sides of the table, working in real world stuff and you know software land. How did you then sort of come to this focus that you're operating around now?
Yeah. So what we invest in is what I call industrial sustainability. I'm looking for solutions that are inherently better for the planet from an environmental standpoint, but also, and equally as important, just good business decisions for the people that are going to buy these things. The story I tell is when I was a kid, I was the guy that would buy like the eco-friendly sponge, and it would be terrible and it would fall apart. It would be expensive, and you'd be like, wow, that was awful. And then you start wondering, why is the eco-friendly solution always the worst one? And the answer is it's not. When the eco-friendly solution is the better solution, that's just what you already do anyways.
Hmm.
You're already doing whatever that is. I can come up with a million horrendous ways to do stuff that you're not going to do because it's actually a worse way to do it for you and the environment. So then the question becomes, how can you actually have some impact? So when we find solutions that we haven't started using yet that are inherently better from the user's point of view and from the environmental point of view, and just fund those and get them to market so we all can start doing things a little bit better.
So give me an example of like what one of these technologies or ideas might be, either a portfolio or just a hypothetical example of like what you think could be a technology that ultimately becomes the best and most eco-friendly option. Because I totally track with what you're saying. I've had several folks on the show talking about how at the end of the day, the consumer is the decision maker, and there's only so much margin to pay extra, so to speak, for this green premium, right? And so making the actual solution the most ecologically effective one is really the only way to drive this systemic impact long term.
100%. Thank you for saying that, by the way. So yeah, well, that's part of it, right? Like I won't touch stuff with green premium. It just doesn't, it's not going to get adopted. It's not going to scale. And if it's not going to scale, it's not actually have any impact. So why bother? So perfect example. So Toro is a company we invested in early. It's a electric motor that doesn't use rare earth elements. In fact, it doesn't need magnets at all.
Hmm.
And, you know, 2 years ago, the angle was if you can get rid of rare earth elements, you're getting rid of the risk of supply chain problems. From a sustainability point of view, if I have an electric motor that performs the same way, but now I don't need to mine, tons and tons and tons of material to get a little bit of neodymium or whatever type of magnetic material you're trying to use, there's a huge impact there from a sustainability point of view. And that's actually a theme that we see a lot, which is if we can reduce the resource intensiveness of solutions, right? We're reducing the impact. We're also reducing the threat to your supply chain. And with recent political and everything else going on, events, all of a sudden now it's the front of everyone's mind, right? So to a certain degree, and look, if you really start to think about this, environmental problems are ones that are longer term and not quite so in your face. But that actually makes them good places to invest because they're not obvious yet to people. And so you start looking and finding these solutions that are going to become more and more and more advantaged over time, maybe as resources get depleted, or the cost of trying to dispose of stuff goes up because fewer people are willing to accept extremely nasty stuff in their backyards, right? All those themes are continuing. Copper is a great example. Company DexMat we invested in. They're in Texas, by the way. Um, it's a carbon nanotube filament. What's it great for? Replacing copper and wires. So copper ore, you need roughly a ton of material to get like 3 kilograms of copper. We've found and basically mined all of the easy to extract copper ores, at least that we're aware of. Here you've got a supply constraint matched actually also with a much stronger demand driver in the forms of electrification and data centers, in an area that, for most part, no one's thinking, hey, what's the new copper? Like no one ever said that, maybe until just now.
Hmm.
So it's just a good place to be looking. And then, these problems sort of surface themselves around you. And then you've got the momentum and the attention
Hmm.
of the broader market.
So maybe this is a dumb question. I've looked at a ton of, you know, quote unquote climate tech or, sustainability focused startups here in Houston, Greentown Labs, right down the road from me, a ton of stuff coming out. Big fan of what they do. But I've seen a ton of companies pitch and their solutions all sound amazing, right? Like all of these people are going to change the world. Every solution is going to be the thing that everyone starts using. How do you and like what's your lens on sorting through the legitimacy of that? Like how do you think about okay, this is something that's actually interesting. I see opportunity for the green premium quote unquote to go away over time because as early as you're coming in, obviously none of these things are to a point where they make economic sense yet. And so it's a
Yep.
bet that this could get there. How do you like suss that out? Maybe give me one layer deeper of your, I don't know, your criteria or like your filter. How do you think about that?
All right. So there's like the tactical answers, right? Are things like talk to that company, see if they have a TEA, a techno-economic analysis. So what can
A what?
techno-economic analysis? So that's basically if you build a 1-ton plant, it costs this much per ton. If you build a million ton plant, it's going to cost this much, usually provided by a third party so that, I have reason to trust it. There's also specialized people that do this. They know what types of processes and what those machines cost and how many square feet you need and about how much uptime you can expect. I mean, it's a very complicated thing, but I want to see, when you start doing this at scale of any sort, what price do you get to? And then try and put myself in the customer's point of view. And by the way, we really look at industrial solutions. So not the consumer for me, but you can try and make yourself think like the consumer as well. I try and think like the factory that's going to do this or buy this product. Is this something that actually makes enough sense? And attention is the hard part, even in industrial solutions, right? This might save this company a bunch of money, but are we like a top 5 money savings thing, or are we like number 47? And like, it'd be great, but I don't have time. I've got a million things to get to before I get there, right? So that's part of it. The other thing I want to see is, can you get to a price where you have the ability to wipe out your competition in a particular application before you need to spend like $100 million building a plant? So can you make this in a $20 million plant and beat out the incumbent competition? And one of the good things about doing this in sustainability, particularly if you're looking at solutions, replacing solutions already there, right? In startup land, they always say, your number one competition is inertia. Well, if I'm going out and selling a commodity product, I already know that my competition is inertia, right? I have to be cheaper than whatever I can do currently to a large degree, and I'm not going to kid myself about that. The shiny object draw isn't there as much, which actually is a good way to sort of pre-filter startups that they have a great solution, but it's not going to go somewhere.
Meaning like it's unfocused or it has too many things that they're trying to accomplish, or like, what do you mean?
Let's just flying cars, for example, right? Maybe I want that. I don't know. Do I want a flying car? I don't know. What is the actual market value of a flying car? Some people think it's cool and they'll put money into it and they're going to go for it. And maybe there's a niche case for it. But the reality is, I get to most places in my life without having to fly anywhere on a daily basis. So do I really need a flying car? So that's the shiny object approach, right? Of the flying car. It's this cool new idea. Now, if I was like, hey, I'm going to get you polyester for making athletic clothes, and it's going to work just like your current polyester. Way less exciting, right? Unless I tell you that I'm going to do it 20% cheaper. Then you're like, oh, but there's no shiny object. It's just like the price is lower. That is the very fundamental, tangible reason the customer is going to do this. Particularly when we're talking in textiles and clothing, a 20% decrease in price is massive. They'll kill for it because they're working on extremely thin margins, right? So that's what I'm getting at. If you go to these boring places, there is no shiny object illusion you can put on yourself. I don't know, maybe flying cars are a great idea or not, but I don't know, and so I'm not going to invest because I don't know.
This is so good. I mean, everything you're saying is like what we see. Nobody wants to talk about saving 3% on polyester, but to your point, at massive scale, the outcomes there could be ridiculous. I feel like in quote unquote startup land, it's way more fun to talk about the new frontier and flying cars and that kind of thing. And so startups in this space that you're focused just don't get as much airtime. How do you find them? Because oftentimes they're boring stuff. They don't really market themselves super well. I mean, God, I come from an industrial background as well. And like the marketing strategies for most of these businesses are just awful. And you're like, this is your website. This is your brand. Seriously? How do you find these companies who are often just like innovating in a closet and they find one or two industrial customers through personal relationships and never really go to market? Like, that feels impossible.
So that's not usually what it looks like. What it usually looks like, because we're in these massive older industries, usually this looks like someone has some interesting research coming out of a university. We've got new science for a way to do this. And this is part of our approach, is that if you do things the old industrial way, people are like dying, like I said, for a 1% increase in profitability or, cutting in cost. That's fine. And that's why like the if you look at like how we make chemicals, for example, I mean, these are massive plants that have train cars or, like hundreds of train cars coming in every day to load in one particular chemical, and then they'll load out some other chemical on the other side, and they've squeezed every little bit of margin out of that. You're not going to go show up with something that's, a 0.5% increase in efficiency and start your own company now that makes, I don't know, pick a random chemical. By the way, when you're making plastic, you take oil and it goes to one factory and they turn it into something, and it goes to another factory in a different state. They turn it to something else there. And it goes to another factory in another state. They turn it to something else there. And eventually you get something that you're going to use. This is a wild, expensive, massive supply chain with lots of weakness, but it's extremely efficient. And you're not just going to hop into this game lightly. So when you're looking at sustainability solutions, generally what you're saying is, can we just replace that whole thing entirely and just do something totally different? And so that's where you're going to get these sort of step changes in value. And that's what gets really interesting, right? So DexMat, like I mentioned, didn't say, let's make copper bend better and make it lighter and make copper survive at higher temperatures. That is not what they did. They said, we have invented this thing, and you know what it looks a lot like when you look at its physical characteristics. It's a lot like copper, but it's better in all these ways, right? It's just a different approach. So to answer your question, where do you find these? I love universities. Greentown Labs, like you mentioned in Houston, is a great place. By the time they're there, there's usually an element of filtering that's happened so that, they're a little bit more believable that they're actually doing the thing they say they're doing. There are definitely other accelerators and incubators in the sustainability space. And also, one of the nice things in hard tech, and particularly sustainability, hard tech and industrials, which is boring, is if you show up and say, I invest in that, you might be the only person in the room.
I love it. So you're primarily looking for, I like the way you said, step changes in value. You're not really looking at, I'll call it continuing innovations or, like small improvement type innovations. You're looking for a fresh, completely new way of doing a thing that essentially eliminates the existing supply chain or replaces some part of the existing supply chain.
Yep. And part of that is there's the sustainability angle and then the profit angle, right? Our world's largely built on petrochemicals. It is, I'm sure there's plastic in this shirt. I know these buttons are plastic. My computer's got plastic everywhere, and that all comes from petroleum. And like I said, that's a system that's been working on ways to solve the problems it has for 120 years. So they've really eked out all of the juice they can squeeze out of petroleum as the solution. However, it's kind of silly to think that this is the best way to do it in all of physics and the universe. There's a great group called the Biomimicry Institute that says, pretty much every human problem is something that nature has had to deal with, and it's had several million years to try and figure out those answers. So can we look at solutions that are there and see if there's anything we want to do? So all that to say that, yes, when you start looking outside of this sort of like incremental improvement world and just say, instead of doing A better, let's find B that might just be a completely different approach to this problem.
So one of the other things that's interesting to me, I'd be curious your take on is, like, as a smaller investor, as a really early stage investor, it's easy when thinking about hard tech, real world stuff. A lot of angels in particular sort of either are like fully in and they get it and they're on this, or they're like, no, I don't do that. I only do software. It's one of the, you either won't touch it with a 10-foot pole or you love it. As a smaller investor, meaning, not institutional, multi-million-dollar bets, like building huge things, is there a place for smaller investors in the hard tech world? And if so, like, how have you found that to be the case in your journey?
Oh yeah. Well, so there's a couple factors here, right? So one is early stage, people are looking for anyone that's willing to join the team, right? Particularly if you have a technical background, you can provide value. The reason a lot of investors don't like hard tech is, and there's a phrase for it, which is hard tech is hard. People have been saying this for years. All of the big splashy VC money has happened in the software space. The names that people know, like Facebook and Google, right? These are things that people use as individuals. It doesn't mean money hasn't been made in these other places. It just looks a little bit different. And there's a couple factors there too. As a smaller investor, it means you're going to invest earlier, right? We do pre-seed mostly, a little bit of seed, but these are smaller valuations, earlier stages. And one of the things people worry about, it's hard tech. You have to go build this factory. It's going to cost $100 million and you're going to get diluted to the nth degree in that process. And the answer is you shouldn't be investing in companies that need to do that. What you should be investing in are companies that can actually produce their product profitably at much smaller quantities. And that's when you know you've got something that's very interesting. There's two reasons for this. One is great company I love. We invested in called Ravel's a great example. They have a way to recycle textiles. So all of our shirts, for the most part these days, they're a blend of polyester, maybe cotton, but almost always spandex. It's really hard to separate these things out profitably. Ravel's come up with a new way to go about separating these textile fibers. So that's awesome. They can produce polyester at the same price that you can get virgin polyester, but they can use your scrap to do it. So now you don't have to throw your scrap away. There's basically none of your clothes are made from recycled clothes for the most part. Even if you have recycled content, if it's polyester, that polyester used to be a plastic water bottle, most likely. That's where the polyester came from. It didn't come from old clothes. All right, major problem, major industry. Textiles, you're generally thinking massive plants. But the beautiful thing about what Ravel's done is they don't need to build a massive plant to do it. They can do this very profitably at small scale. So now, instead of having to go build one big $500 million plant, I can build one plant, prove that it works, and then I can get financing for plants 2 through, infinity. So it's a different world. Software, you're thinking, all right, we're going to raise money here, then we're going to raise money at this next much bigger valuation, and it's always going to be equity coming in. Part of that is because in software, you don't actually have like collateral that you can get loans against. You can have revenue, and that's part of growth, right? Hard tech, I might actually have assets that are real assets that if I need to, I can go sell to pay back my my financiers. So now all of a sudden debt becomes part of the problem. So instead of it being series pre-seed, then series A, all the way up through H and on through the alphabet, it's series, pre-seed, series, a seed, A, maybe B, but then I'm done raising money that's diluted. Then I start going and looking at debt solutions. So now I can get the same increases in valuation and do really big things in really big companies, but I'm not getting diluted along the way, I should say.
Do you feel like exits happen more readily? Like, how does the exit storyline play out in this kind of hard tech world versus software in your experience? Helpful to hear the financing journey, but like when and how do exits happen? I imagine there's these massive industrials looking for new ways of doing things. So it seems like they've got giant balance sheets,
Yep.
very acquisition focused and just not sexy and splashed all over
Yep.
TechCrunch.
Exactly. So what you're leading to is exactly right. So you're going to see a lot more M&A type acquisitions, but these are big companies, like you said, with big balance sheets, and they are buying sometimes for the decrease in cost, but sometimes it's strategic. I'm going to buy you so that my competitors can't use your technology. If I'm a company that's making chlorine, for example, Dow Chemical might come in and buy me because they might be a customer. They also might be a supplier. And that's what's interesting too in these hard tech spaces where you've got these long supply chains and people are taking item A and turning it to item B, which turns into item C. If you're making B, the person that makes item A and the person that buys item B to make item C are both potential acquirers for you.
So the vertical integration
Yep.
strategy, I mean, when the balance sheet grows, like where do we put this?
Mm-hmm.
We go one of two directions, horizontal or vertical. Makes sense. So tell me more. I want to pivot a little bit. You have spent the last couple of years building this approach, first time doing this. I'd love to hear a little bit more tactically about like what the last couple of years have been like for you in the current, macroeconomic political environment that we are. Tell me more about like the last couple of years as the first time doing this.
So there's, this is a funny time to be in venture capital.
It is.
The ability to raise money is definitely constricted. In fact, I just saw data recently that I think fund formation in 2025 was as low as it's been since maybe 2013 or something. Don't quote me on the dates, but very low for new fund formation. Um, that's been interesting. The other interesting part is people know I'm in sustainability and they go, oh my goodness. Well, they just repealed the IRA, the Inflation Reduction Act, which had all this money for solar and wind farms and all this sort of stuff. How are you doing with that? I mean, that must be terrible. And it's just like, actually, I don't really have a lot of impact from it other than the perception that people have that means
Mm.
anything in sustainability is going to be doing terribly. It's like if you tell people I'm in venture capital, they're like, oh, okay. Therefore, he's investing in the next social media company. Like,
Mhm.
no, that's not right. And you're like, I'm in sustainability. Oh, I got it. You're investing in solar panels. Like, no, that's it's also not right. Um, so the corner that I'm in has avoided a lot of both positive and negative attention um, in regulation sphere, but also with tariffs and everything, startups who are inherently going to be making everything domestically and buying things and selling things here are sort of protected. And then again, if you're in one of the things I love to find are circular economy solutions, um, that is taking waste and turning it into value. Um, that you don't have to cross borders for that. All of a sudden, you've given your customers a lot of protection from supply chain vulnerability by the fact that their own scrap parts can actually become their own feedstock for their process.
So you mentioned to me that previously that your space is sort of a skate where the puck is going type of a world. Tell me more about where you see the puck going right now that most people like aren't talking about. Like there's one person on this puck and everybody else is off doing their own thing, not really playing the game. Like tell me what you're seeing that most people aren't talking about.
Sure. There's the part that's there's two where the puck is going, and we'll talk about. One is everyone's thinking about AI and data centers, right? So yes, there are solutions for data centers that's much more picks and shovels type play than doing the AI itself. That's fine, but everybody's thinking about this, and the number of deals I see for data centers is crazy right now.
Oh, I bet.
So that's a we know where the puck's going, but so does everybody else.
It's a big puck, a giant.
Well, it's just there's a million people heading for it, and so
Hmm.
again, it's a melee. Oh, you don't want to be there.
It's a great
Um,
word, melee.
um, the thing that's quietly happening, but as particularly around hard tech, is there's always been sort of what they call the valley of death, which is this awkward space where venture capital money stops making sense and standard institutional debt financing doesn't quite make sense. And you're in between the two of them. Because this has gotten so much attention, two things have happened. One, founders have gotten savvier about that and have realized that it's not practical to say, we're going to lose money until we build a $500 million plant. They're not going down that path as much anymore. Like I said, they're doing the modularity. Other thing that's happened though is that finance solutions for hard tech are getting more sophisticated. Um, Company who actually invested in much earlier called Tangible that does financing for hard tech solutions in the climate tech space is changing what's possible from a financing point of view, or not, maybe not even what's possible. They're changing the cost of doing it. So now, where I'd have to go get an investment banker and go do a road tour of Europe to try and get some money for my solution, I can use Tangible. They're able to turn everything into something that is translatable by banks. Let's say, for example, I'm making bird scooters, right? If I'm Bird, I'm going to spend VC money to develop the scooter, to design it, help me with marketing, get the stations set up, and all that sort of stuff. I'm not going to use VC money, ideally, to build a bunch of scooters. What I want to do is get debt to do that. The problem for the bank is that you might be Bird doing scooters. Someone else is doing electric bikes. Someone else is making robots for a factory. Someone else is making drones. Someone else is building um, modular plants that recycle clothing. So as a banker, I have to figure out how to depreciate all these things, like the risk profiles for all these things. Tangible allows all these startups to translate that into something that makes sense for the bank. Why do I bring this up? As far as where the puck is going, I think the financing step for hard tech is going to get a lot easier in the next couple of years as people start realizing that this is where alpha is being made. Um, Startups start packaging themselves to make sense for this type of work, right? Because always classically the story has been you need to raise a bunch of VC money. Why aren't you doing a $20 million Series A? Blah, blah, blah. It's just not what makes sense for hard tech. That's a software playbook. And so a Third Sphere is a fund that's done great work. They have what they call the seed trapping playbook. Big fan of them. I'm a big fan of theirs, I should say, to be grammatically correct. But the hard tech is hard statement, I think, is quickly becoming hard tech is hard, but yes, so is software. So it's a good place to be. And I think it's something that the barriers that classically have been there are starting to go away. And you make most of your alpha when something has changed and the larger world hasn't quite realized it yet.
Do you feel like returns expectations are materially different for like a comparable SaaS or AI focused VC? Like how do you benchmark sort of your objectives and the outcomes that you're looking toward in this space? Is it materially different or is it comparable? And if so,
I think it's comparable. I think, and it depends on returns is a funny thing to measure, right? Because you've got the total multiple, you've got your IRR, you've got when did, it just relates to when did the money show up. I think IRR is going to be very similar for hard tech, but you're also going to have these big swings that went and did something amazing. I mean, I don't think anyone that invested in SpaceX is upset that they're not in a fintech company.
that's a good point. Do you see like, I guess I feel like there's been a lot of, now let's just say geopolitical turbulence the last couple of years. Like, how do you think that is going to impact this space specifically, the industrial sustainability? I know you mentioned earlier the local, built local has some unique appeal and some defensibility that it maybe didn't a decade ago. Like, what are some of the other impacts and outcomes you're seeing as a result of
Turmoil,
this?
instability, uncertainty really is what that relates to. And uncertainty is terrible for working in the enterprise space, but also on the software side. But the reality is that, if big companies don't know what to expect, they're just like, I'm just going to wait. I'm just going to hold on and see how this shakes out. And then I'll make my decisions. Cause they're making a decision that might take 5 years to implement.
Sure.
So they can't quickly spin on a dime. So they have to be a little more conservative. And I've seen that where companies say, we like this, we have the budget for it. I just don't have the manpower right now to dedicate to R&D. And sometimes that translates into it's hard for a startup to get involved. Sometimes that translates into we need to buy innovation because we don't have the time or understanding to do it ourselves.
Great. A lot of instability that we can talk about implications for. Uh, so Anthony, tell me more about the Southeast more broadly and what kind of your local scene looks like, and maybe even beyond the Southeast, like within the industrial sustainability world, like where are pockets of particular innovation and energy around that category happening? We mentioned a few already in the conversation, but in the Southeast specifically, and then globally, where do you see exciting stuff happening that most of us would miss?
So we'll take a quick snapshot on the Southeast. So the Southeast is an interesting area because lots of manufacturing is moving here. I mean, every day, practically, the state of South Carolina, where I am, is announcing a new factory coming in, and it's a big one. We've got Volvo and Boeing and BMW and all these auto and airplane manufacturers, but there's something else getting built here. It's a place with a lot of population growth. It's a place with generally friendly tax structure. So what does that translate into? It translates into a lot more manufacturing happening in this area than there has in the past. Um, I really like actually making connections with any of the sort of geographically focused either startups, startup incubators or funds. Front Porch Ventures here in the Southeast that does just Southeast investments. Those connections are great because they're finding these opportunities in their geographic area that most people wouldn't take the time to look at. And then you get the ability to then say, hey, that's actually exactly what I do. Or, because we're working together, right? I'm not Southeast only investor. I do US and Canada, but they do know when they see something that's hard tech and sustainability to give me a call, right? So I find that it's a very useful thing because they're trying to make things happen for their region, which means there's more resources available for these startups. So sustainability, I see a lot of stuff in the Southeast. I see a lot of stuff in the Midwest as well. Again, large manufacturing area. You've got people up in like Ohio, and really trying to make a startup scene there. Um, so the Midwest entirely is very useful. And actually, we did talk about Houston. Honestly, Houston is one of my top cities. Let's see. So DexMat's in Houston. Three of my portfolio companies are Texas based. Texas has a lot of reasons to look there from a hard tech point of view. You've got engineers, you've got machine shops, you've got low cost of land, you've got a lot of money coming out of the oil industry. You've got research universities like Rice, and you have nucleation sites like the Ion and Greentown Labs. So the startup scene actually has something to form around. So, anyways, I think in 10 years, people will be like, "Oh, yeah, of course, there's tons of tech and startups there. It only makes sense."
Well, you're speaking my love language, talking about Texas like that. Keep going. Tell me more.
Well, it really, I mean, there's the flip side of that is in hard tech. It's different if you're trying to do, actually, well, not really. Anyways, a lot of people try to do drones in the Bay Area and all that. And that's fine. But like space tech, you're probably going to do that out of Texas, right? Or Florida. Those are the big areas. New York, Boston, San Francisco Bay Area. Those are very expensive places. And so if I don't have to be there to find a bunch of software engineers, I should probably be somewhere cheaper. My dollars go farther, right? It just makes sense to get out of those when you're getting to more of these hard tech type solutions.
Which I think is fascinating because over the last decade, I've had so many conversations on this show about like, do I have to move to Silicon Valley or can I build elsewhere? And obviously the answer is it depends on your industry and what you're trying to do and et cetera, et cetera. But everything I'm hearing you say now is that, for this space, you probably don't need to be in Silicon Valley or Boston or any of these other major areas because it's hard to build up a plant and
Yep,
industrial thing in that area.
exactly. Well, what industry are you playing in, and does it have a connection to that area too? Right. I mean, if you're if you're doing anything that relates to oil, I just don't see. I mean, there is oil in California, but it's not like Texas is. If you're doing anything that touches on that, I would probably want to be in the Texas area.
Yep, that seems wise. Anthony, any other takeaways, final thoughts you leave our audience
Um,
with?
particularly for people who are looking at getting involved in tech investing, especially when it comes to hard tech, I would say do lean into your network of people that maybe if you've already worked in the area. The next big thing that happens in whatever industry you're in is not going to be painfully obvious to everyone. It's going to be something that someone invented somewhere in a university, probably. But then they said, hey, this actually has applications in X, Y, and Z places. And let's try those. And maybe it takes off in one of those three. Um, but, don't, I don't know. My relatively contrarian approach is everyone's talking about something. That means you should have been investing there 7 years ago.
Okay, so I have to ask about the tech transfer problem because I've talked with university leaders that just have this pile of stuff coming out of their university, and there's entire offices dedicated
Yep.
to this
Yep.
problem. Like,
Yep.
we're not going to get into all of it, but you seem obviously a particular fan of the research that's happening in the university ecosystem. As a VC, tell like quick comments on what tech transfer done well looks like and how you.
Tech transfer done well. The university needs to recognize that if they want this company to get venture capital style investment, they're going to have to make room for the founders to have a significant ownership stake. That's the one part that really gets messed up. Is the university says, well, you made it in our lab, so we get 50%. Well, you're broken cap table day one, so good luck. So the really good university recognized that what they need to do, streamline the process, and recognize it's better to have 5% of something than 50% of nothing. So that's like on the broad side. The other side of it, though, is I like to see patents. I want to see ownership. I really actually like when a university owns the patent, and startup that's two people has the exclusive license to it because they developed it and they've got the deal with the university. Reason is, now if someone infringes on that patent, I've got an 800-pound gorilla known as whatever it is, University of Texas, that's going to defend their IP rights instead of my two-person company that's got $600,000 in the bank somewhere that we now have to spend litigating IP. Good luck, So I really actually like to see that in the early stages.
Okay, so don't take 50%, and make sure that the patents are owned or managed or licensed from the university, because
it doesn't have to be, but it's just, it's actually probably a good thing.
Love it. Anthony, this has been a blast. Thank you for the masterclass on hard tech and industrial sustainability, words that I did not understand nearly to the degree that I do now, thanks to an hour with you.
Andrew, really appreciate it. Thank you.
Thanks for listening to this episode of The Diligent Observer. I'm your host, Andrew, and if you're an angel investor looking for essential angel intel in 5 minutes every week, I think you'd enjoy my newsletter. I send my best stuff, interesting deals, and more straight to your inbox so you never miss a thing. Subscribe today at thediligentobserver.com.